Larry, welcome to the Mindful Fire podcast. I'm so glad to have you here.
Yeah, it's a pleasure to be here. Thanks for having me, Adam.
So, I'd love to have you start by sharing with the audience a little bit about who you are, your journey, and what you're up to in the world.
Yeah, so it's been a long one, and thank you for letting me share that. Number one is I am a husband to Denise for almost 23 years, dad to Zach and Jeremy, who are hockey fanatics like myself, and we enjoy playing golf and hockey. I'm a family guy first and foremost, and I happen to be in the wealth management profession. I'm the founder and wealth advisor at Mitland Financial, and also most recently best-selling author of Financial Planning Made Personal. What did you do today that brought you joy? Growing up, I grew up in a solid middle class family. And unfortunately, at an early age, my mom was diagnosed with cancer. It was something that I saw my dad, struggle with. We weren't rich, we weren't poor. But, in addition to him being a New York City school teacher and having a side gig before it was a side gig, he had his own business. And then adding in my mom's health issues. And I realized as I got older and later in life, in high school and then early on in college, that he didn't have a financial advisor to help guide him. And I was always interested in the markets. In high school, I was watching CNBC, and then in college, I continued to do that. And I started looking into the profession, and it was something that I was like, you know what? If I could help people like my dad navigate unexpected situations in their life, that would be a really rewarding thing for me to do. And it was something I could do for a long time. And the hope was that it wasn't going to be just navigating people through difficult situations, but also navigating good things in life, joyful things like weddings, like buying their first home or retiring, whatever that meant for them. And essentially, I put the pieces in place as I progressed through high school and college to lead me down to a path in the financial profession. Now, 20 something years later, I am still in the profession. I love it every day. I don't feel like it's work because I feel like it's so rewarding. We had the experience this week. We just onboarded a new family to our firm, a family that we're going to be serving. That's the third generation of a family that we started working with 20 years ago. And it's situations like that when you start working with a family and then working with the second generation and now working with the third generation. Those are the things that fire me up and get me excited about doing this every day. We help people design and develop plans, implement them, and make sure that they stay on the right track and avoid, mishaps and potential pitfalls that might set them and their plans back. Today, I do, work with families directly. We're looking to add advisors to our practice as well because of the number of families that we are growing by. In April of 2023, I released my book, Financial Planning Made Personal. So I'm spending a lot of time talking about the book through different media channels, et cetera. And really, the impetus behind the book, it was 10 years in the making. I just didn't have the time to sit down and actually write it and put it out. But after my kids left the house for college and high school, boarding school, I was an empty nester. So I had some extra time and I decided it was time to put it in writing. And really, the book is designed for anybody who is interested in growing their financial acumen and growing their financial situation. And it really is there to give them an easy, definable way of how to look at finance. And I think a lot of folks look at it from a painful experience in terms of it's going to be very difficult for me to think about putting money away. I'm going to have to sacrifice. And we take a whole different standpoint in terms of looking at that and saying, hey, listen, if you have a plan, which is the most important thing, number one, have a plan. And if these things fit into your plan and it works, then that's fine. If these things you don't have to sacrifice, if they bring you joy. One thing I talk about in particular is coffee, right? We were just talking about it before we hopped on here, Dunkin' Donuts versus Starbucks, et cetera. And there are certain pundits out there that would say, hey, oh, well, if you didn't spend that $3 or $4 or $5 a day on a cup of coffee and you put that money away for the next 20 or 30 years, you'll have $15,000 towards your retirement. And that might be well and good, and that might be right for some people. But others, if they get joy out of that cup of coffee and they enjoy that experience that they're having while they're drinking it, and it fits in their plan and they're able to do what they want to do, then we say enjoy the cup of coffee because you don't know, we don't know. Like my mom's situation, she was diagnosed in her 30s, passed away at the age of 47. You may not even make it to 65. So you got to balance today and being joyful with saving for your future and being on the right path at the same time.
Absolutely. I think about that all the time. You just hear these stories of people who, at any age, they just get sick or they pass away for one reason or another, and you just really never know how much time you have. So I think it's really important to get clear on what you actually want and start living into that life right now. And so I know you work with a lot of families and help them build these plans for their life. I'm curious, like, what are the core aspects of your philosophy around wealth management and financial planning? Are there any kind of core aspects and principles that you bring to every family that you work with?
Yeah. So, yeah, I mean, as the book states, financial planning is personal. The actual outcomes and what families want to do is very personal to them. But a lot of the structure and the process is similar. Some of those things is one, a plan is of utmost importance because if you don't have a map, if you don't have a roadmap, then wherever you're going is right. But it'll get you to wherever you're going because you don't have really a defined outcome. Like you talk about on your show, envisioning that outcome and what you want to have happen with your life is extremely important. It's extremely important to have that envision and have that roadmap. So having a plan is utmost important, number one. Number two, starting early. If you can utilize the eighth wonder of the world, which is compound interest, starting early, even in a small capacity, could put you on a path where when you're older and later in life, you're not going to have to sacrifice as much. It's a little bit of a dichotomy because when you're young, you think, oh, I'm not making a lot of money. I don't have a lot of money to put away. But you know what? You do have it because what's going to happen is as you get older and your income may increase, you're going to have more responsibilities pulling on that income. You may have a family, you may have a house, you may have kids. You're going to have a lot more responsibilities. And I would argue that it's actually easier for you to put it away younger than it will be later. So starting early is of utmost importance. And then making sure, going back to the envisioning, making sure that you are delineating what your top priorities are, right? Because we'll outline the plan, but at the end of the day, we'll show the family that, hey, there are 6, 10 gaps that we see in your plan that we need to address. It's not for us to say what's the most important gap to solve. To some people, their concern is, well, if I step off the curb and get hit by a bus, I want to make sure my family's taken care of. So we may need to look at life insurance. Other people are more concerned with my top priority is sending my kids to college. I want to make sure I have enough money. So we start there. So it's important to identify where the gaps are, then set a priority list based upon what those families' needs are, and then start attacking it. And then lastly, the other piece to the philosophy or framework is it's not all about the money. And this is a little bit or a lot different than a lot of folks in our profession. A lot of people go to a financial advisor or wealth management firm, and 95% of the conversation is about the money and how much do I need to retire? And, those are important things, but more important than that is what are you looking to accomplish that vision? And also important is the mental and social impact that these decisions are going to have. Where we see this come in a lot of times is if the family believes in retirement. I don't personally believe in the construct of retirement. I think it's a bit antiquated. I don't think it's really necessary, but there are a lot of folks out there that still believe that they want to stop or slow down working. And that's fine if that's their goal and they're envisioning. Financial planning is personal, but they not only have to be prepared for the financial aspects, but the mental and social in terms of, are they going to be mentally prepared to go from working 40 or 50 hours a week in their role to 20 or 0 hours per week? How are they going to fill up that time with meaningful stuff, not sitting on a couch in front of a TV? Do they have the social circles in place to support that? Because We go to work for a company, you go work for 30, 40, 50 years, you have this instant community, this instant infrastructure from a social aspect. And if you don't put in the effort and energy to build that and continue that either outside of the work walls, you could find yourself in a very lonely space when you retire because you didn't have the time or the effort to do that while you're working. So it's important to, just like we say, start early from the financial impact or the financial situation, it's just as important to think about, consider, and work on the social as well as the mental impacts of how those decisions and how that envisioning is going to affect you down the road.
Yeah, I couldn't agree more. I think that is one of the things that people realize too late often is that they don't have that social infrastructure. They don't have those relationships, and their life is not set up in a way outside of work that when they stop working, they can just move into that already existing structure of, I mean, we're social animals, right?
Right.
Relationships, strong relationships are like literally help you live longer. So when people don't have that, they can miss out on that. So I think it's a really great point to start early with that as well. And I think that's what I try to help people do is envision, like, what does your life look like? And one of the huge pieces of that is, what are your relationships like? What are those things that you think you might want to try, that you think you might want to be spending time on? How do you get embedded in those communities sooner rather than later so that you can have that when you stop working? Because yeah, a lot of people, they stop working or they cut back and they just end up sitting in front of the
Yeah.
TV.
And Adam, to your point, you work all this time. You can't just all of a sudden stop working and then start working on that infrastructure and getting that stuff in place, because it could take you a couple of years to find those relationships and cultivate them into a situation. It might take you a while to, make your way into a golf foursome in order to have, to golf with a bunch of folks a couple of times a week, right? The media will lead you to believe that if you listen to, a number of the reports, that people are working longer, working later in life. And the implication is because people need the money, the financial aspect of things. And listen, I don't dismiss that there is a component of that. There are people out there that are certainly working longer and later in life because they need the money. But there are also a very large component of people out there that are working still later in life because they didn't create or make sure they had that infrastructure, that they weren't mentally prepared. We had families within our practice that, a husband or a wife decided to retire and stop working. And, it lasted 3, 6 months and they were back working, almost a part-time to full-time job or a consulting gig because they just didn't have enough going on to fill up that time. And that is certainly a big aspect of things as well.
I think you're spot on with that. We focus a lot on people who are looking to quote unquote retire early, right? Financial independence, retire early. I like to think about it as financial independence, reprioritize early, right?
Right.
It's certainly not my goal to sit around in front of the TV or on a beach with a pina colada all day, every day, right? And I think that most people don't want to just sit around, right? But they
Agreed.
don't know what's on the other side. They don't have the social infrastructure, but they even haven't tried things, right? You can
Mhm.
only play golf so many times a week. So there's got to be other meaningful and purposeful things for you to do. So
That's why pickleball is on the rise, right?
that's
Look at,
it.
pickleball is on fire because you could play it later in life. It's a social game. You get
Hmm.
together with many other people and you go play for a couple hours. And that's why
Yeah.
I think that sport is taking things by storm because of a lot of those aspects that we're just discussing.
Yeah. No, you're absolutely right. My parents are recently-ish retired and they moved into a 55 plus community and they intentionally moved into this neighborhood that was a newer neighborhood, right? Like most of the people are just moving in now. So that allowed them to have that instant community, right? A lot of
Mhm.
people looking to meet other people, they're playing pickleball, they're playing cards, they're going golfing, they're going to the pool. and they're just having a blast. I mean, I think they basically live at a resort. Like it's pretty nice. But I think you're right. Like pickleball is a perfect example of that. And it's just a matter of getting clear and moving forward and trying some things out. So back to the financial aspect of things. The first is to have a plan. Somebody who maybe doesn't yet work with a financial planner or doesn't have a solid plan necessarily, what are the components that you advise people to consider in their plan?
Yeah, so that's a good question. And I think one of the confusing things for probably a lot of your listeners are the word financial advisor, financial planner, investment advisor. They're thrown around and in such a way that the expectation is these are kind of all the same. If you have that title, you do the same work. And the reality is there are a lot of people with those titles, but not a lot of people who do what we do. There are folks out there that are simply selling insurance, but they're called investment advisors or financial planners. There are people out there that are simply doing investments and they're called financial advisors or financial planner. To your listeners, make sure you're working with somebody who actually has the capacity to build and develop a plan, and they're going to be there with you, tracking your success or lack thereof with that plan, in addition to everything else. So, to answer your question, the components of the plan vary, based upon what the family's goals and objectives are. But generally speaking, we're looking at working towards some type of retirement goal for the family in terms of assets that they need to financially retire in a way that they would be able to replace their current income with income from investments. We also look at protection because it's great that you accumulate these assets, but what happens if something happens to you or your spouse prior to you reaching these goals, and you might have education funding on the horizon, retirement. Insurance is a component of that in terms of life, long-term care, disability in order to protect that earning power. And then on the other side, property and casualty, your auto, home, liability, et cetera, is very important because you don't want to get in a situation where your financial wherewithal is at risk in terms of that. So we look at that. We also look at your tax situation. In terms of when you do get to that point of distribution, how do we do that in a tax efficient manner? Education funding is typically a big component, especially for young families. Some families may have a goal of buying a boat or taking a trip around the world. All of these components get embedded in the plan, and we look at essentially where they are today from a financial aspect, where they want to be, and start building a game plan to work towards starting to achieve those goals. Maybe ridding themselves of debt may be part of that. So there's a lot of different facets to it. And then part of that conversation, which is not a numerical part, is what we discussed earlier, is having conversations with them about that mental and social impact of what those decisions or what those goals are going to require from them from a mental and social impact, so they're prepared for that as well. And then we track the plan over time and make sure that we're staying on track. And if we're off track, what needs to be adjusted or changed in order to get us closer to where we want to be.
I'm curious, what are your thoughts on long-term care insurance and like the cost of that? So I'll give you a little background. I grew up around assisted living facilities. My parents had assisted living facility business for 30 years,
Right.
and that's what they retired from. And so it's like a big part of my life has been around
Sure.
that. And obviously that's quite expensive and only getting more expensive. So what are your thoughts on planning for that in the future, either for our own parents or as individuals? Two different
Yeah.
questions, but yeah.
Yeah, I think it's the same answer. I mean, you have to plan for it. It's probably one of the largest risks to somebody's asset pool that they have. And you either have to be in a position where you're going to have enough assets to self-fund it, or you have to have a position where you're going to have some kind of insurance coverage to help support it. Or in the middle, you may self-fund it up to a certain degree and then, use the insurance to fill the gap. I would also say that in long-term care insurance, there's been a lot of changes in that arena. Policies that were written 20, 25 years ago were fantastic. Problem was the insurance carriers underpriced those policies, And now what we've seen in the last couple of years are insurance companies leaving the marketplace. Pricing of those policies have increased substantially. Coverages have saw increase in premium. So there's been a lot of changes in that regard. There are now some life insurance with long-term care riders attached to them that are a little bit more digestible for a lot of people. But I think at the end of the day, you need to have a plan. You need to envision what your future is going to look like in a realistic format. You can't think, oh, I'm never going to need these services or I'm never going to be in that place, because there's a likelihood, a very high likelihood, that you may need those services when you get older. So it's something that you need to visit, take a look at it, understand what the cost benefit is, and make a decision for your family. I can share a personal anecdote. My wife's uncle is now in an assisted living facility. I had helped facilitate a purchase of a long-term care policy 20 plus years ago. So it was one of the really good policies. He has like $1 million+ benefit. And basically, he's in an assisted living facility that's running like $8,000 to $9,000 a month. And the long-term care coverage is covering that need and probably will last for a 4 to 5 year, multi-year, not 4 to 5 year, but even beyond that, cover him in there, assuming his costs remain the same. Obviously, those are going to go up exponentially over time as somebody who's been exposed to that industry. Those expenses, healthcare costs, have risen more quickly than regular inflation. So, depending on how long, but that's a situation where he has a million two worth pool of coverage that he was paying 2,000, 2,500 bucks a year for. He might have been paying that for 20 years. So let's say he paid in $50,000 over that period of time, and he's got a $1.2 million benefit. So that was a great way to leverage it. That policy is not available today, but there are things available. So I think it's important that you don't just brush it off and say, this is never going to happen. It's got to be at least looked at. I tell a story in the book with one family in particular. Probably about 6 or 7 years ago, we looked at long-term care insurance for them. And they were in their mid to late 40s at that point. They had kids in college, very high expenses because of it. And they said, we just don't have the cash flow to support this right now. And we said, okay, but we'll continue to have this conversation. So fast forward to about a year ago, kids were out of college. The wife's parents were having issues, needed care, saw the expense associated with it. And they said, you know what, let's revisit that now. And we did. And now they have ascertained a life insurance policy with long-term care benefits, so that they're at least going to plan to self-insure part of it and use the insurance to insure the other part of it. So my point is, it's something you have to address. Just because it's not right at one point in time doesn't mean that you forget about it and never look at it again. You have to look at it again as time goes on, because it may make more sense, or there may be a situation in the family's life that is a light bulb moment that they're like, oh, now I understand why we wanted to have this conversation. And it's just about educating and understanding the cost versus the benefits.
Yeah, it's a good conversation to have. We haven't had that conversation on the podcast before. It's most people hoping to retire early aren't thinking about long-term care and assisted living facilities, but it's important, right? Like if you're lucky enough to live that long, you're probably going to need some assisted living care. And it is very expensive now, and I can only imagine how expensive it's going to be in the future. So definitely something to keep in mind as well. So let's switch gears to this idea of joy, right? The subtitle of your book is What Brought You Joy Today? So tell me, why is that such a focus for you, and how does that manifest in your life and in your conversations?
Yeah. So, what did you do today that brought you joy is important. And it's really like our mantra. And the reason why it's important to me and why I share this with the families we serve in our community is, as somebody who personally experienced a parent getting ill at a very young age in her 30s and passing away at 47, dovetail that with the fact that I lost my brother-in-law. My wife's brother died by suicide at the age of 27. Those two events, my mom first and then my brother-in-law, really reinforce that, hey, we may not make it till 65. We may not make it to 75. So envisioning and planning for those later times in life, it's important and we should certainly do that. But at the same time, not everybody has a contract that says they're going to make it there. A lot of folks in my profession talk about, saving money for the future and putting money aside. And that's all well and good, but they don't balance it with what did you do today that brought you joy? And I think that's important because if you just sock all your money away for one day, hopefully enjoying it at 65 or 70 or whatever that number is, there's no guarantee that you're going to get to enjoy it. So we really feel that there's got to be a fine balance between planning for the future, but also doing things today that's going to bring you, your family, your community, those around you a great deal of joy and being able to experience that joy with them and being able to be part of that. So it's important. And we always bring it back. We're not saying spend money or do things just for the sake of spending money and doing things to put yourself in a bad position. But if you put a plan together and you plan for those expenses, like we were talking to a family yesterday, they want to allocate $13,000 a year towards a vacation budget. That's what they want. So as long as we plan for it, it works in the plan, then there's no reason why they shouldn't be experiencing and enjoying those vacations each year. Now, if it put them in a situation where they couldn't fund all their future goals, then maybe it wouldn't make much sense. Maybe we have to dial it back, but you got to find a fine balance and make life a joyful experience. Otherwise, what are we doing it for?
Well said. I totally agree that, what are we doing it for if we're not living with joy? So I'm curious, what brings you the most joy?
Oh, listen, my family, hands down. I enjoy spending time with my family during hockey season for my boys, especially. I have one in college down in Philly and another one at boarding school who moved away at the age of 15 out in Minnesota. And I live in New York on Long Island. But basically, at the start of hockey season, my wife and I get a tremendous amount of joy in the fact that we're typically either in Philadelphia or wherever my older son is traveling to for his games for that weekend, or we're somewhere in the Midwest or wherever my younger son is. So we typically split time on the weekends, bouncing back and forth, and we make sure that we spend time with each of them. And it brings me a lot of joy seeing them, spending time with them, and seeing them pursue their passions. It brings us all the joy in the world. And, I couldn't think of a better way of spending that time with them because there's going to come a point where they're going to be on their own, even in a greater capacity than they are today with their own families, etc. So I'm going to enjoy every minute of it while I can, and that brings me a tremendous amount of joy.
Love it. Love it. Yeah, we were just talking earlier about me driving my kids to driving my son to camp, and just how
Right.
it's so nice to have that time and be with them. And yeah, you were kind of recounting how you used to love doing that as well, and now it's just, different phases of life. It's a different amount of time we can spend with them. So enjoying it while we can.
Agree.
Larry, so let's switch gears now into the Mindful Fire Final Four. You ready?
I'm ready. Let's do it.
All right. So the first question is all about envisioning, right? That's super important to me. And I'm passionate about using the power of our mind to create the things that we want to show up in our life. So I'm curious for you, like, tell me about a time that you envisioned something for your life, and maybe it seemed improbable at the time when you first had the idea, but tell me about how you used envisioning to make that happen.
Yeah, I mean, I use, Adam, I use envisioning all the time. Right now, I'm envisioning 10xing my firm in the next 5 years. That's one thing that I'm in the midst of right now. And when I first started in this profession, I envisioned growing a firm that would be available to serve families in the best capacity with the best people, creating a family environment where the firm was a family environment in terms of the people that worked here as well as the folks that we serve each day. And we've done that. And, envisioning is a big part of that in terms of creating that. So I'm a big fan of what you're talking about and what you're sharing. And I'm a product of that. And I think that we have to constantly do that. And, our visions are going to change along the way, right? As we get closer to accomplishing the initial vision, then I think you want to up the game. Most people do want to up it up a little bit and adjust it. And I continually do that over time. And like we've talked about, once you have that vision, it helps you make decisions in a much clearer fashion, because if somebody or something comes my way that, especially now, like I talked about, I'm looking at 10x in 5 years, our organization. If somebody comes to me and says, "Hey, I want to have a meeting with you, or I want to talk to you about this, or I want you to do this." If you don't have a vision, it's like, yeah, okay. And then, you're
Mhm.
going with the way the wind blows. But if you have this vision and you take a second to be mindful, take a deep breath and say, okay, is this meeting, is this interaction, is whatever I'm being asked to do going to put me closer to or further away from that vision? Basically, I now have those parameters to make that decision. And whether it's a yes or a no is typically based upon that vision. Worked in the past, like I mentioned, working on it now as we speak and in the future. And, hopefully maybe you'll check back with me in 5 years and we'll see where I'm at. But it's very important and very helpful to that decision-making process.
Love it. Yeah, I have no doubt that you will 10x your business in the next 5 years, because that's like you said, you're priming your mind to make that happen, and you have that. I love what you said. You have that as a filter that you can put any opportunity through and ask, is this moving me closer to my vision or not? And if not, it's maybe not the right opportunity or not right now. So the second question is, what piece of advice would you give to someone early on their path to financial independence?
So that's a great question, because everybody should be thinking about this. Start early, start in your teens, start when you have that part-time job, start saving in a Roth IRA, start saving money somewhere, because you don't realize, you think when you're not earning a lot of money that you don't have the money. But if you pay yourself first and put that money aside, it's going to be hugely beneficial to a point that when you have a lot of those demands on you later in life, because the thoughts of, hey, I'll do this when I earn more money or I have a higher income, it's somewhat right. But the problem is, what you're not thinking about is all the additional responsibilities that you're going to have pulling on that higher income. As a parent, right? You
Yep.
now have a house, you have obligations, mortgage, you have the kids and what their obligations are. So although you're earning more, you have more pulls at those same dollars. So it makes it more difficult. So if you start early, even in a small way, and start putting those funds away and utilizing the power of compound interest and compounding, the eighth wonder of the world, it's going to be hugely beneficial. So maybe when you're at that point where you have those greater obligations, that you'll actually be in a position that you might be able to start pulling that back, if you're not, in the position to stop it completely because you've hit your goal.
I think that's so important. Starting in any way that you can, as early as you can, because yeah, it's going to take care of itself. If you start early and you keep it going, it's just going to grow and grow and grow. And I've seen that in my life even before I really had a full grasp of financial independence and the possibility of the retire early or reprioritize early. I was investing in my 401k, and I had some things from growing up, and it was like, wow, this actually, I'm further along than I thought, because I had made those early contributions and just let it ride. All right, Larry, the third question is, what piece of advice would you give to someone getting started with meditation and or mindfulness?
Yeah, that's a good question. I mean, in terms of meditation and mindfulness, I think it's hugely beneficial. I will tell you in full disclosure, we've talked about this before, Adam. I tried to meditate on many, many different occasions and I stopped. I just felt like I was doing it wrong. I would sit down, I'd listen to the guided meditation, and my mind would go in a million different directions. I'm like, I don't think I'm doing this right. But as I spoke to others who were advocates of meditation and mindfulness, and as I talked to experts in that area, I learned that what I was experiencing, everybody experiences it. Everybody has wandering thoughts. Even those that have been doing it for years and years, they experience it. It's just a matter of recognizing it, bringing yourself back, taking that deep breath perhaps, and refocusing and getting that mindfulness back on track. So I suggest start even with a small win, even if you do a couple of minutes, give it a try and don't worry about it. There's no right, there's no wrong way of doing it. And you'll see if you compound that practice over a period of time. I would expect if you did it daily for a couple of minutes, or as you said before, daily ish for a couple of minutes, I would sense after 30, 60, 90 days at most, you're going to really see some beneficial effects of the practice for sure.
Yeah, that's great advice. I think that everyone so many people that I have taught meditation to come to me with that exact problem. That they feel like they're doing it wrong, that their mind is all over the place. So just getting started and recognizing that, yeah, that's totally normal. That is part of the practice is very helpful.
And learn from me. You don't have to, you don't have to recognize it yourself. I'm telling you, it's going to happen. Yeah.
Exactly. I had the same experience. Okay, the last question, Larry, is how can people connect with you online, learn more about your practice and your book and all the things that you have going on? Where can they
Yeah.
connect with
So
you?
Yeah, so the easiest and best thing is, if you're interested in the book, go to financialplanningmadepersonal.com. That'll bring you to any of the available options, whether it be hard copy, paperback, or audio version of the book. Our firm is located at Mitland, Mitlin, financial.com. We have a lot of free resources that are available on the website, as well as a contact us if you're interested in having a conversation to see if we're a fit in working with you and your family. And then if you just want to connect on social, I'm on just about most social media platforms, most of them under Lawrence, Lawrence Sprung. I think Instagram is the only one I'm Larry Sprung, and I'd love to connect and, learn more about you and what you're looking to do. Always shoot me a DM or just simply be a casual observer of our content because we post consistently and constantly on those channels.
Wonderful. Thank you so much, Larry, for being here and sharing your experience and wisdom with the audience.
Adam, it's been my pleasure. Thank you so much and enjoy the day.